So if I choose the other one, area, but if you select the candles, which is here, then this is the candle pattern. So Japanese invented this candle pattern. So it is called as Japanese candlestick pattern. They invented it first. So
what indicates the indication shows there's in red and green?
I'll come to that.
Yeah, please.
Okay. Say for example, now from this point to this point, if the price is going up and I got an indication. So what I'm trying to do here is I'm going to first buy and then sell. Say, let's take an example of Z Limited. Okay. So this is the chart of Z Limited. Okay. Now, there is an indication from here to here that it is going to go up. Now, this chart in the x-axis, the chart represents the time and the date. Y-axis of the chart represents the price. So at this point, I know the 29th, which is today, 10 or 10 o'clock, where the price was trading, that is the indication what we get out of this chart. Now, whenever I see that it is going to go up, what are we going to do? When I say action, I said we are going to first buy. So I'm just clicking on buy. And then, number of quantities I'm going to mention here, say 100 or 1000, whatever. And then the price at which I want to buy. How do we come to know about the price? It is showing in the right side, which is the y-axis here. So I'm going to enter that price and say buy. So once the buy is executed, when I say executed, you have invested. Now you can go to the same stock, sell, and then same 100 quantities, how much, whatever you have bought. And then you say, for example, the exit price is say 292. So 292 is what you're going to give and say sell. So when I say buy and sell action, taking first as a buy action and then sell action is nothing but clicking on the buttons when you actually start trading. Okay. So now, for example, today what happened here? From here to here, the ZEAL stock fell. So when I get an indication that, okay, it is going to go down, then what am I going to do? As a retail trader, I'm not just waiting for a buy call. Okay. What I can do is whenever the price of the stock goes down, there is an opportunity for me to place a sell call. So what am I going to do? I'm going to first sell. The first action, what I'm going to take when the price is coming down is sell. So sell high, which is 288, for example. 288, I'm going to sell first. Click on this. Once the sell is triggered, I'm going to buy. At what price? Say, for example, somewhere 284. This is the action what we are taking in terms of buy and sell. Okay, any questions here?
284, there is a prediction or that's a market?
No, that is the indication. That is the, when we apply the couple of rules and strategies, that is where is the indication where it said, okay, now you can go ahead and buy. That's what we are going to start. Yeah. Okay. That is called as entry criteria. Entry checklist or entry rules or entry criteria. All right. Now let's talk more about the candle pattern. What is there and So I also gave the same example last class. If you have a set of data, right? So if you want to represent that in a understandable format or readability purpose, so it is always good to have a chart. So we always plot a chart, isn't it? Even if we want to see the performance of our kids and, in the whole class, how many kids have taken a distinction or whatever it is, anything for that matter. Even in the organization, there is a performance appraisal. There is a chart. How, last 5 years, how this particular person has performed. For everything we use graph. Why? Because of the easy readability purpose. Very easy to understand when we visually see that, instead of going through just the values or the data. Yeah. So similarly, whenever, see, the moment by moment, there is a fluctuation in the stock price. So how do we capture it? So it is captured through the candle pattern. So these look like candles. They look like candles, which has a, the flame, which is called as tail here, upper tail or lower tail. So it is called as candle. They look like candles, so we call it as candlestick pattern. Japanese invented this pattern, so it is called as Japanese candlestick pattern. Most extensively used chart pattern is Japanese candlestick pattern, because none of the charts, whatever we saw here, will actually give you the proper indication for the technical analysis. I mean, we are so used to these candles. Okay. Now, what is the Indian equity market time? What time the market opens?
9:30, no?
9:15 a.m. it opens, and 3:30 p.m. it closes. Now, the question is, what happens after this? So, the stock will not stop trading. The trading continues, because whenever the Indian market closes, the other markets are still open. There is a European market which is still open. London market is open. Dow Jones will open. Early morning Singapore market will open. Yeah. So all of those markets will definitely have an impact on the Indian market because of the foreign investment. Okay. Say, for example, last time I think I tried screener.in, it didn't work. Let's see now. How many of you did you go? Okay, now it is open. Say, for example, let me go to Axis Bank. In any stock. So you get everything which is required for the Axis Bank. Whatever is there related to Axis Bank, you will see. What is the market cap? What is, the dividend? Everything. How is the performance? And then there is a quarterly result, profit and loss, balance sheet, whatnot. What are we interested here is the shareholding pattern. Who are the investors here? Can you see here? Foreign institutional investors and domestic institutional investors. So if I click on this, this much of a foreign investment will come to Axis Bank. You can see this one, Government of Singapore, Abu Dhabi. So all these are institutional players. When I say institutional players, as an institution, they invest. It is not individual person who's investing. As an institution, they invest. Yeah. So, and then DIIs are the domestic, which is the, our people. These many domestic institutional investors are investing here. So this is nothing but how much percentage they hold. See here, a couple of people, they have actually taken out their investment. It's not that they have invested in these months, but here they have taken out. They are continuing to invest. There is one which is promoter, and then there is FIIs and DIIs, and this is the public. NPS. See, everywhere, wherever you see that, you get the returns of 8%, 9%, 18%, blue chip funds or whatever. So where do you think they will go and invest and give you that returns, that kind of returns? So this is where they go and invest. Of course, some companies, again, our companies will invest in the foreign companies, the way we have the investment from their side. So what happens is, for example, if Government of Singapore, pulls out its investment, there is an impact in the Axis Bank, on the Axis Bank. Okay. For example, if there is any European, the foreign investment which is coming and they pull out the investment or they invest more on top of it, there is definitely an impact on the Axis Bank. Okay, so it is always mutual. All right. So now generally we see this when we think of investing for a long term, because I really have to go through all this because I really want to get associated with Axis Bank for a longer term, say 5 years or 3 years. Intraday, I don't think all this is needed to see, or even a weekly or monthly is also till 1 month. It's no need to see all this. This is something called as fundamental analysis. How old is the company? How strong is it? Okay. All right. Now, so the Indian market. Now, what happens after 3:30? As I said, there are different markets which are investing. They are investing. They are pulling out the investment. Again, they are investing. So because of that, there is a huge impact on Indian market. Though for us, the markets are closed, but the stock price keeps fluctuating moment by moment by moment. Because we have an access to see that fluctuation only through the charts, and the charts are available from 9:15 to 3:30, it looks like, okay, only this is where it is fluctuated, but it's not the case. Clear? Now, so there is something called as, this is the edit box. You can type in any company, it will actually show you. Say JSW Steel. So JSW Steel, stock NSE, National Stock Exchange, is what I want to choose. We will come to this. Okay, what is futures and CEP and all that. We will discuss what are these and why these many are there, first of all. Yeah. So JSW Steel, NSE stock. So the chart changed because this chart or this variation is with respect to JSW Steel. Now you have to read like JSW Steel. I'll come to the time frame, and this is NSE. Okay. Now, this you understood. We are choosing the candle pattern. There is something called as time frames. Something called as time frames. We have these many different time frames. So what is the meaning of each of these? So let me explain one day so that it is very easy for you to understand, and then I'll explain the final. So if I choose one day, every candle here is representing the variation of a stock price for that day, for one full day. If I hover over on this and you see the date down in the x-axis, it is showing 29th March 2022. So which is today. So what happened today? Today, this is the fluctuation or the variation of the JSW Steel for the full day, which is from 9:15 to 3:30. Okay. I made the tail a little thicker so that it is clearly visible. Any color or something you have to change, double click on the candles and you can change here. If you want dark green or the pink, whatever color. And the wick is nothing but the tail of the candle, which is shown here. So I made it the black so that it is more visible and clear. Now, from what point is this? 726 to 765. 40 rupees or 40 points fluctuation has made by the JSW Steel for today, which is 29th March. That is the meaning of this. That is how the candle formation is. Now, yesterday what happened? 28th March. This is the representation of yesterday's candle, yesterday's price movement. So yesterday, 717 to 731. 13 rupees or 14 rupees is the total variation. And 25th March, 710 to 726, 16 rupees. Yeah. So each day variation is represented because I have chosen the time frame of 1 day. Every candle is 1 day candle. Now let us go to 1 hour. So 29th, today, this is the first candle from 9:15 to 10:15, 1 hour. However, the variation is, that is represented with this candle. And the second candle starts from 10:15 because the first candle is for 1 hour, 9:15 to 10:15. This is 10:15 to 11:15, 11:15 to 12:15, 12:15 to 1:15, goes on like this till the last. So every candle here is a representation of 1 hour fluctuation or the variation of the stock price of JSW. Now let's go to 5 minutes. You will get more candles if we select 5 minutes, isn't it? Because it's a shorter time frame. So 29, which starts from here, first candle, 9:15 to 9:20, 9:20 to 9:25, 9:25 to 9:30, 9:30 to 9:35, goes on like this till the last candle, which is 3:25 to 3:30. Now, what are we doing here is, we will apply our analysis on this. We will apply a couple of indicators on this and then analyze whether it is going to go up or down, and accordingly, we will be going for buy call or sell call. Now, can you relate that to buy and sell, what we were talking about? Is that clear? Any questions so far?
But every day this graph will change, you know. So maybe
Yes,
in case it is yesterday.
Of course. You see, 29th chart is like this, and 28th is here. Sorry, 28th is here. From here to here.
Yeah.
This is 28th.
So when do we use the 1 day versus the 5 minute chart?
When you are investing in a swing trading means today you're buying and you want to keep it for a couple of days or a week or so. Then you got to use the 1 day time frame. Okay, if you're an intraday trader, means you want to complete your trading in next 15-20 minutes, that's all. Then you have to choose 5 minutes and 15 minutes.
Okay.
I'll give you those timings.
Okay. And
Yeah.
Does it also show you the trend, like if you have like a time frame?
Yes. With the help of indicator, we can actually see the market trend as well. Okay. All right. So 5 minutes is understood. Every candle is a representation of that 5 minutes duration variation. Now let's see what exactly the red candle represent and what the green candle represent. So the green candles represent the buy candles or bullish candles. Okay. Red candles represent sell candles or bearish. Bullish, bearish, you understand, isn't it? Bullish is when the price is going up. Bearish is when the price is coming down. Okay. So when the price is going up, we can make profit only when we buy, because we are buying at the low price and selling at the higher price. For example, buying price is at 100 and selling price is at 105. So we made a profit of 5 rupees here per share. Okay. So whenever its market is bearish means whenever the price is coming down, that time we have to go for a sell call, where you first sell it at say 100 and say 200, and then you buy it at 190 rupees by making 10 rupees profit here. Okay. Now, let me tell you the difference between the green and the red candles. Okay, how they formed and how do we read them? Because that is most important, how to read them. Here, this is one of the examples for green candle. Okay. This is how it looks like. Now the filled part is called as body of the candle. It's called as body of the candle. And the tail, whatever you see here, it's called as wick of the candle or tail of the candle. Filled part is called as body of the candle and tail is called as, you can call it as tail or wick. Now, there are different types of candles, okay? So some may have the lower wick, very long wick. Some may they don't have the upper wick at all. They don't have the upper wick. Some of them, they don't have the body at all. Now, what is the meaning of all this? So they try to tell something. Actually, you know, if you keep watching the candles, no, they start talking to you. They tell something, you know, the behind the scene, what is happening actually. Who is dominating the market? Whether buyers are dominating, whether sellers are dominating. How is the momentum? How much is the volume which is getting traded? So every candle actually speaks to you. There are different names given for different pattern or a candle, okay? But there's no need to remember the names. Try to understand what is the reason behind such a formation. Why no body for a particular candle? What might have happened? If you know that logic, there is no need to remember the names for the candles. There are thousands of different candles. Different candle means, you know, the length of the wick, length of the body. And there are paired candles, you know, 2 candles together, what they represent, 3 candles together, what they represent. There is a reversal patterns. Lots and lots of things are there. Okay. So now for this green candle, what did we say for the green candle? Green candle is a buy candle. It is buy candle or bullish candle, right? So when we say buy candle or a bullish candle, what should happen to the price? What are we expecting the price to be?
Go up.
Yeah. So when the market opens here, say this is the open price. Open is equal to 100. Considering this as 1-day candle, 9:15. The stock opened at 100 rupees. Then 3:30, it closed at 110 rupees. So open price and close price. Why it is green? Because open price is less than the close price. The price has gone up. So this price is called as open price and this is called as close price. And in between 9:15 to 3:30, what exactly happened was this stock also traveled or touched the low price of say 95 and high price of 115. Okay. So consider there is a y-axis here. So y-axis represent all the price, what we saw on the chart. Let's again go back and see that after this. Okay. So here it is 95, 96, 97, 98, 100, 101, 2, 3, 4, 5, 110, 15. So It opened at 100 rupees at 9:15 and closed at 110 at the time of closing. But in between, we don't know, probably at 11 o'clock, 12 o'clock, 1 o'clock, whatever it is, it has touched the high of 150 and it has touched the low of 95. So the total fluctuation, if you see, as on this day, was from 95 to 115, which is 20 rupees fluctuation.
So this tail means lower volume, huh?
Yes, the tail means it's a low point.
Lower volume, right?
It's not volume. This is the low price, lowest point it has touched as on that day or as on that duration what you have checked in.
Okay, got it. Sure.
Okay, so this is, if I'm considering this as a day candle, then throughout the day, somewhere between 9:15 to 3:30, some time it has gone to 95. We don't know that. We'll see at what time it had gone. And it has touched the high of 115. Okay, so this kind of representing the candle in the 4 price format is called as OHLC. Open, high, low, close. Now, this is the basis of all the technical analysis. Like I say now, upon closing of this candle, you initiate a buy order. If I tell that, or if the entry rule says that, then what is the meaning of that? Exactly at 110, we are going to place a buy call. And after it reaches 215 or 20, whatever, according to the exit criteria, we are going to exit the call, exit the trade. So every analysis is based on this. So this is very, very important to know. So any questions you can ask me now.
The same logic in selling column also, no? Sells
Yes,
also,
yes.
correct?
Yeah. So OHLC data is, we actually we are trying to automate this. We have written the already we have written the code. Okay, so using this strategy, I think, wait a second, let me, since I just told you, let me show that to you. So this is what we have written. So Zerodha is where we are connecting to it and we are automating this. For this, what is very, very important? The important thing is getting the, see, Bank Nifty only we are trying. Okay. So getting the OHLC data. Get historical data is nothing but it gets all the OHLC data of the past and then put the analysis on that. So this is what we're trying to achieve actually. We are almost in the testing phase, real testing. Back testing is over. Now we are into real testing. With one lot we are trying. So these are all different conditions what we have put. A lot of things are going on. Okay. Why are we so sure about this? Because the strategy is so good. That's why we can easily automate this. Yeah. Okay, let's come back to, where were we? Yeah, here. Not here. This one. Now, similar to this, let's take the sell candle. This is the typical candle what we are discussing. Now, sell candle represent what? It's a bearish candle. Bearish means sell.
Downtrend.
Sell candle.
When the price comes down. Red candle always represent the market stock price coming down. Yeah. So the open for this is going to be here. The open price is equal to 300. So 9:15, when the market opened, this particular stock opened at 300 rupees. When it closed, again, considering this as 1 day candle, when it closed, the closing price of this is, for example, 280. Okay, so what happened on the whole day? Actually from 300 to 280 it came. That's why we call it as bearish candle, because as you see for one full day, what happened for the prices? It has come down. In between it has gone up till here and all that. But because we are saying that this is a representation of one full day, that is the base for us. One full day, what is the performance? For example, you know, today this particular stock, it opened at 300 and finally closed at 280 rupees. So 20 rupees down. That's what we say, isn't it? Now, in between, it again made a high of, say for example, 307, and it made a low of 74 or so. So the total fluctuation, what it does for the whole day was from 274 to 307. The difference is how much it varied. But actually, it opened at 300 and closed at 280. So again, this representation is also called as OHLC. If you observe both the candles, the high is the same. I mean, in green candle also, we say this as the high, wick as the high, the upper wick as the high, and lower wick as the low. Only the difference is open and the close. Here, the open is here and closes above. Here, open is at the higher price and close. Okay, understood? Any questions here?
No.
All right. Now, let's go over a couple of candles like this. In this particular candle, now somebody tell me what is the OHLC data? So the OHLC data is displayed just in front of the stock name. JSW Steel, 5 minutes time frame, NSC and OHLC data. Whenever you hover over on a particular candle, it is specific to that particular candle. The OHLC data is specific to that particular candle. Now here, if you see, this is a green candle. It had opened at 738.95 O price. And low is also the same because there is no wick. When there is no wick, lower wick, so this is the lowest it has reached. Low is nothing but open here. And then it actually closed at 750.05 and made a high of 750.35. A small wick is there. Okay. Similar to that, we will be seeing different candles. Okay, candle pattern is also very important at the time of entering into the market. So we will be studying that as well. Let's take an example of one red candle. Any red candle will take. Probably this one. Open is 735. Close is 733.65. So the close is less than the open because it's a bearish candle. And high is almost same as open, just 0.05. If you see, it's a very, very small wick, negligible wick. We can't even see that, isn't it? This is the wick. This is the wick. Okay. And this is a lower wick. So what exactly is it is representing? On which day? Rekha, can you please tell? Which day, what it is representing?
29th March, 11:35.
So 11:35 to what duration is this?
This is the 5 minutes candle.
Okay. So from 11:35 to
11:40.
11:40 or 11:39:59. Okay.
Okay.
So you can consider it as 11:40 till that this is the complete fluctuation. For 5 minutes, this is how much it is. Understood?
Yes,
Clear?
ma'am.
Okay. All right. Now, let us see what are the different markets we have to trade. What is that opportunity we have? You know, when you see how many markets are there and you know what is the possibility we have, you will never come up with a reason saying, you know, okay, I didn't trade because of I didn't have time and all that. Okay, so as we said, Indian equity market, there is a equity market. Again, in equity there is a derivatives market. In derivatives, we have two things, which one is called as futures and options. Futures and options. And we have commodity. In commodity, we have agri-commodity.
Commodity all comes under one roof, or that's also different, is there?
That is also differences there. So there are agri-commodity and there are non-agri-commodity.
Okay.
So agri-commodity is all our, you know, cotton, pepper, cardamom. A lot of things are there if you consider agri. What comes in non-agri is crude oil, natural gas, okay, and bullion metals. Bullion metals are what? Your gold and silver. There are base metals. Base metals are what? Zinc, lead, aluminium, nickel, copper, etc. And I'm just listing the commodities which are volatile commodities. Okay, crude oil is considered to be very, very volatile. Nowadays, you're hearing no because of that Ukraine war or whatever. Bullion metals, gold and silver. Okay. Now, what is the Indian equity market time? It is, yeah, as we discussed, 9:15 to 3:30.
3:30.
What is the commodity market time? Commodity opens at 9 a.m. in the morning and it closes at 11:30 in the night. So you have so much of time, even you can pick up the commodity trading if you're not getting time in this. So basically what I'm trying to say here is the strategy remains the same, because the strategy is derived from demand and supply, which is the basis of every market, be it a stock market or everywhere, wherever you go in life. Even there also the demand and supply is what is happening, isn't it? So what market you want to do, where do you want to trade, depends on you, depending on the time, depending on the capital you have, how much time you want to give, or you want to become a, you know, the full-time trader or part-time trader. You want to have this as another source of income or primary source of income. Then there is something called as currency market. So whenever we say currency market, it is with respect to INR. The currency market is with respect to Indian rupees. So any currency with Indian rupees is called as currency trading, currency pair. For example, INR USD or INR GBP, INR JPY, Japanese yen, INR euro. So all these are called as currencies. I think this opens at 9 a.m. to 5 p.m. I'm not sure about the closing. Okay. Now, what is the next one? Forex. Forex, though it is called as illegal in India, that's why if you see generally the brokers who are top brokers, right, premium brokers, they don't give permission to trade Forex in their platform because it is considered to be illegal in India. Why? See, at least if you invest here, no, our currency is there. If you invest Forex, Forex is both the currencies are foreign currencies, isn't it? So generally it is not allowed, but maybe there are some talks which are going on and we should make it legal because when crypto is made as this, then this also, I'm not sure. SEBI keeps changing the rules. So the Forex is.
It means not safe, like, or why is comes?
It is not the safe question. When they say it is illegal, what happens is even if you make, there is a huge money in Forex and everything is in terms of dollars there. Okay. So there is a questions from IT that how did you earn this? Though we say that it is illegal, how come you are trading and earning in Forex? You can't show that. I mean, people are showing all that is fine. Okay. But that is the actually the reason. You go to currency market and trade, no, because INR is there. Why do you want to go to Forex? That's the question. Maybe so that is why a lot of wallets have come. You know, even though the broker is not permitting you to do the Forex trading, a lot of wallet concepts like, you know, IQ options, coin switch, what is that, OctaFX, how many are Binance, all these are what? These are all though we call them as a trading platform, they're all kind of a wallet. The crypto started with that, right? Yeah, you were saying something, Sam.
No, I said people may not want to trade in INR maybe because of slow movement.
Slow movement, yes, of course. Okay. You compare the INR versus USD and Euro versus USD chart. Highly volatile are Euro USD, GBP USD, and yeah, those two. Euro, USD, and GBP. These three are the high volatile Forex. Any combination you take them off there. Okay. See, the limit, you know what? If you make more than 30,000 profit per day, and then when you withdraw that amount, you know, you want that to be back in your bank account, then a lot of questions are raised. So till 30,000, they don't have any issues. Per day I'm talking about. But if you're doing more than 30,000, then lots of questions will come from IT. All right. And then even if this is not possible, there is a crypto. Crypto is 24/7, 365 days. BTC, USD, Ethereum. Now look at the opportunity. And apart from this, you can also invest in the US markets, which opens somewhere between 7 p.m. in the evening. You can also invest there. And you know, the beauty of the US market is you can invest partially. Means because everything is traded in terms of dollars. If one share value is say $600, $100 or something like that, I can't go and buy, you know, 10 shares or one share also. Then can I have only the investment of say 5,000 because I want to invest only 5,000 bits to start with. Can I go ahead and buy that share? Of course you can. Okay. So now a lot of US investments are going on, but you know, we have a different broker account we should have and all that things are there and the timing, all that is there. But yes, it is possible is what I'm trying to tell here. All these are definitely possible. Commodity, I have traded extensively in crude oil and zinc and lead. When I was going to office, in office, this is not allowed. This was not allowed. Everything was blocked. So I used to come back home in the evening. I used to take out some 1.5 hours of time. From 7 to 9 is where it becomes more volatile. So that time I used to do. Now again, we switched back to Nifty Bank. Okay. All right. Any questions here? So the whole thing behind this is I don't want to hear any reason that, okay, I didn't trade because of my office. I didn't trade. See, it's a valuable time what you're investing. You're investing your effort, energy, money, time. And for a good cause, right? Yeah. So start practicing from the day one. Any questions here? Maybe, if you want to try Forex and crypto, you have to open a different account because...
Which market is the safer one? So compared to
Sorry?
others? Which one is the safer one?
Everything is, if you ask me, everything is safe. Of course,
Okay.
with the strict stop loss.
Yeah, got it.
Safe in terms of, overnight vanishing and all that. There are very, very good companies even in crypto and Forex. Like Binance is a top performing platform. We can go ahead and open an account. IQ Options is been since so many years. So that is also a very trusted platform. Okay. So likewise, there is nothing like, overnight they'll take away all our investment and go. It's nothing like that. Only thing is what we should be answering to IT, if at all the question comes that, okay, now how are you getting, where from which source it is coming from? There may be questions. That's it. Yeah.
So, so in our next class, we see the intraday, how we do it, time frames and those stuff.
Yes.
Okay.
So next class, what are we going to do is we will study the candlestick patterns. There are around 8 to 10 patterns which are important for our strategy. So we are going to see that. And then, because that is the most important, if I say there was an entry here, then you ask how come? Why not here? Why not? So that is the analysis. So we are going to do that. So for that, the candle patterns are very, very important. We are going to cover that. And then what are the different ways of getting into a trading? One is the equity, one is the derivative futures and options. Of course, these are the different markets, but in equity itself, what are the different ways? That is what we are going to study. And along with that, I will make you do one exercise wherein, we will, before even taking an entry, we already know how much profit we want to make. Okay. So a lot of people, they get into a trade, but they don't know where to exit. It happened with me as well. When initially, when we started, we see some videos and blah, blah, and all that, when there is no guidance or when there is no mentor. So all that, some trial and error we tend to make, right? So entering is fine. Now, after entering, we keep watching the profit and loss fluctuation, how it is happening. 1,000 rupees profit we are in, we won't exit. Oh, anyways, it's going good today. Let's wait. I think market looks bullish. Then we wait, and even when it has reached 1,500, we will not exit. Then when it comes to 300 or 400 back, then we will exit and then regret. Oh my God, I should have exited. So should have, could have, nothing works in trading. Discipline, follow the discipline. That's it. That is one learning what I have learned from this. Out of experience, what I'm sharing with you. Should have done that, could have done that. Okay. It's not a very $1 trillion market. We are just investing few lakhs, isn't it? Okay. So all that you will see in psychology. Psychology is really, really very, very beautiful. Okay. There were a lot of people, they failed to make money, though the strategy is good. Psychology is what matters ultimately. Because consider me and Sam, we are taking both the same trade, we both are taking. Okay, because we have the same strategy. We have learned the same strategy. We are taking same trade. Now Sam makes 7% profit and he comes out, and I make loss. And he calls me and says, hey, you know what? Actually, this strategy with this, I made 7% today. This is my first profit. I'm feeling very happy and I really strictly follow the discipline. exactly rules I followed. Now I say I made a loss. Then he asked, why? Entry you took on 11:30 only, no? Yeah, yes. Then why? Because the person who was trading here and the person who was there were totally different. For me, at the time of 7%, what came was greed. I know everything. I have practiced strategy very good. I have done a lot of mock trading. When that I know everything comes, no? That kills everything. That's the only difference. Otherwise, everything is fine. Both of us have followed the same entry criteria. 11:30 only we entered. And 11:40 or 45 we exited and it makes a call. And I am at loss. Okay. So what I'm trying to say here is following the rules is very, very important.
Is there a demo account we can practice?
Yes, we do.
Okay.
I'll introduce that to you. Not now, actually, we'll take another 3-4 classes. But we do have that. I'll introduce that to you and you can start practicing. Of course, extensive 2 weeks of practice on the demo account, then you can go ahead and invest. You're not going to invest right away once the strategy is complete. All right. Okay, any questions or we'll wind it up? 31. No questions?
No, ma'am, it's clear.
It's clear? Okay. So next
Total,
class.
how many classes?
Total, there are 13 classes, including the psychology class. And next class onwards, we are going to discuss the price action. When I say price action, it is the candle pattern. And then next class, that calculation, whatever I said, exit point or exit, not criteria. What is the exit percentage? We are going to calculate that well in advance. We are calculating it and keeping it ready. And then we are going to go to the strategy.
Got it.
Okay. So anything, if you're not understanding, you can give me a call or message in the group, or you can call Yashasvi also. Don't hold on to your doubts till the next class. Okay. All right.
Sure.
Okay.
So thanks. Good night.
Thank you. Good night. Bye-bye.
Thank you everyone.
Thank you.
Good night.
Good night.